Okay, I'm going to kick off. Welcome to today's Construction Equipment Association Power Hour, brought to you in conjunction with Plantworks exhibition. I'm Joanna Oliver. I'm Director of Global Programmes for the Construction Equipment Association, and it's great to see so many faces on the screen that I've met around the world in the last 25 years and at various conferences that we've run. As I said, we've got the biggest turnout we've ever had for a power hour. We're up to very nearly 130 people, and that just really goes to show what an important topic it is. And looking at the list of people attending, yeah, we've got everybody from the biggest of the OEMs right down through the supply chain to distributors. And interestingly, we've even got quite a few government representatives involved in international trade. So, so the government's coming online to see what it's doing, which is good. So I'm just going to share my screen and do our standard rules of the house. I'm working on Rob's computer, seeing as mine died yesterday, so bear with me if something doesn't work. Okay, key thing is that the webinar is held in accordance with the CEA corporate compliance rules. If anybody doesn't want to comply with them, and you can find them on our website, then now's a good time to leave. The webinar will be recorded and will be available with the slides, which Holly's kindly agreed to make available on our website as soon as we can. Please do stay on mute unless you're asking a question, and use the chat facility in Zoom to ask a question, because we've got so many people online today. We'll try and look at group the questions together. And again, both our speakers have agreed to take questions offline if we do run out of time. To conserve the bandwidth, please turn off your video unless you are actually speaking. And please don't blame me if there are any technical difficulties, because I'm a Luddite, and Robert will do his best to sort anything out. But hopefully we will have an uninterrupted session. The topic today of Brexit and beyond, really it's quite frightening how quickly we're moving up towards the end of the transition period. And looking at a recent survey of CEA members, how much people still don't know. I think it's something that I've been working on quite closely, but it seems to be very much a moving target. Just when you think you've got the hang of the new customs regulations and tariffs and VAT and everything else that can happen, deal or no deal, then the goalposts move. So to set the scene today, I'm going to introduce Malcolm Harbour, who is a patron of the CEA, and also Malcolm was an MEP for over 15 years representing the West Midlands, and he has a very keen interest in the single market. And with a degree from Trinity Cambridge in mechanical engineering and 32 years working in the motor industry, I think Malcolm's incredibly well placed to bring us up to speed on what his view is on how we're progressing towards the transition period and hopefully a free trade agreement. So Malcolm, I'm going to pass over to you to do your introduction, and good luck.
Right. Well, good morning, everybody. It's a pleasure to be able to speak to you, even though in the digitally, having presented at many previous occasions. So I think I've met many of you. I think the last time was in Peterborough when I did a seminar there. Well, Joanna was flattering enough to suggest that I might be on the inside track for what's going on, but I'm afraid that isn't the case, because relatively few people are. I mean, I'm a veteran of European negotiations, so all I can say is that this is perhaps not unexpected. I think those of us who've been engaged in these negotiations over many years know that in many cases, they do go right up to the wire. So only the people who are still talking really know about the details. All I can say is that I have been confident that there will be an agreement. Not all my colleagues in other European countries agree with that. But in a sense, the fact that there isn't a lot of news coming out of the negotiations, and there's not a lot of side negotiations through the media or through political speeches going on, is of itself quite an encouraging sign that something is happening. And people I talk to in Brussels feel that essentially there is text on the table. So even though there's lots of discussions about there's a long way to go, it will be those fine details that always hold up these negotiations. I mean, I think it's not of interest to us in our sector, if I can include myself as part of that. But the fact remains that issues around fish and fisheries remain extremely politically sensitive, and that is all going to be about numbers and about years of review. And there are always compromises to be done when you've got down to that level of detail. I think on the issues about ensuring that Britain has a sovereign position on legislation, but nevertheless continues to be engaged with the European Union in matters which affect our single market relationship, I think, again, there is a deal to be done. It will be all about the words that convince people that Britain can still make its own rules without interference from the European Union. But on the issues that will affect you in particular, or all of us, for example, what is going to be the future directions for machinery directive, for greener machinery. And interestingly, I think we can expect as much radical change from the Prime Minister's announcement today as we can about matters to do with Brexit. But I think we will want to keep alignment on all of those things. And so what will be in the final deal about that is not entirely clear. People like me who have been massive enthusiasts for the single market and were promoting it during the referendum, I'm afraid have not really been included very much in the negotiations. But nevertheless, I think there is a recognition that it doesn't make any sense, for example, in construction machinery, to run a different track from the rest of the European Union. On the other hand, in green matters, we might well want to set some different paths on that in the way that we manage things like public procurement and indeed some of our deadlines and the announcement on electric cars, for example, or manufacturing of cars that are no longer powered by internal combustion engine is something that the UK can do on its own and obviously intends to do that. So I think there will be a deal and we'll have to go through the details. And just to conclude, in case you're scratching your heads about whether all of this is much too late, my colleagues, former colleagues in the European Parliament, and I still have many friends there, do have a sign-off on this deal, but they have been keeping very close to what's going on and being very closely informed. And it's important, I think, to understand that a huge amount of work has already been done. Lots of things have already been agreed in this deal that we haven't yet seen. We're going to have to read the fine print of it. The European MPs are on top of that. But the interesting news today is that they may well convene a meeting on December the 28th. And interestingly, the fact that we're working more digitally now and more online means that they could probably do that to sign off the deal. So I don't think there will be a hold up there. So that's the best I can do for you, I'm afraid. I'm happy to take any questions on that. And if you want to post anything in the chat box, then please do, and I'll pick that up because I'm going to be really interested in the next section because my closing point, and I'm sure Joanna will hand over formally to Holly, but just to say that everything she is going to be talking about on customs will happen in any event, something that depends on the, but we hope that the agreement will deal with some of the other matters we just talked about, particularly about product regulations, ability to get products certified and all those sort of tiresome things. But I think that Joanna has another seminar planned in January to address all of those things. So it's been a pleasure talking to you this morning, and I'll hand you back to Joanna.
Thanks very much, Malcolm. And as Malcolm said, we'll take questions at the end. So if anybody does have questions for Malcolm and Holly as we go along, please write them in the chat box. As Malcolm alluded to there, we will be doing a webinar along these lines to cover all the technical details, certification, rules of origin, type approval, everything that fortunately all the engineering people among us need to worry about, as opposed to the straight import-export that we're talking about today. Which brings us neatly on to our next speaker, who is Holly Tung. With over 20 years experience in the customs and international trade sector, Holly now runs Brightfinch Customs Consultancy and is co-owner of Avocet, the customs clearance brokerage. Holly provides training for a range of trade associations, and she's also a consultant with the Institute of Export, who I think a number of you are members of. We're really grateful for Holly today because I know there's been a lot of demands on her time, and she's going to be guiding us through the intricacies of international trade requirements post-transition period. As I said, we normally do try and stick to the hour for the Power Hour, but this is such an important topic. Please bear with us if we do overrun by 10 minutes at the end. And we want to give everybody a chance to ask questions, but Holly and Malcolm will be able to take questions offline if we totally overrun. So Holly, I'm going to pass over to you, and I know you're going to be sharing your screen, so there might just be a few seconds where nothing happens.
Hi everyone, and good afternoon. Hopefully you can see my screen. Just to double check on that point. Great. So yes, as Joanne kindly said, I'm here to talk to you about the custom side of things from next year. Myself and my business partner James identified quite early on that there was going to be a huge uptake in demand for this sort of operation, and we really wanted to make sure that we had a service available for importers and exporters that were kind of maybe jumping into this straight from scratch. You know, we've got a lot of only intra-EU traders, and as we predominantly have worked the last few years in compliance, we felt that we could put something quite unique together where we would be able to put all new staff through some very comprehensive training, obtain qualifications in this field to set ourselves apart from some of the other agents. So that's basically who we are. We're based in Manchester, but have national coverage and partners across the EU as well. Okay, so without further ado, we've got quite a few slides to get through, and I'm going to just take you on a bit of a tour of how things stand based on the current government guidance. There have been a few twists and turns with this, so I'll bring you up to speed, hopefully. Okay, so in terms of timeline, the UK, as we know, left the EU in January this year, but moved straight into a transitional period. So in effect, nothing's really changed as it entails the movement of goods between the UK and the EU, and we've still been trading off the EU trade deals. Come 1st of January, this is when all the changes are going to start kicking in for real, when the UK begins to trade independently. Just to recap on what we mean by this exactly, so up until the 31st of December this year, even though the UK have technically left the EU, we have this common external tariff that is applied to goods. So those trade agreements that we're still accessing as part of the EU mean that any goods imported into this block are subject to one set of duty rates, and then can move under free circulation between all members. So we see harmonisation of standards, and until this point the EU have managed all trade negotiations on our behalf. It means that the movement of goods is very seamless. There's no border processes between the EU member states and the UK until the end of the year. No additional customs documents or entries needed. Intrastat reporting, of course, but that's about the extent of it. So what changes in January? From 1st of January, we get removed from this common external border between the EU and the rest of the world, and we become a third country, as they call it, non-EU member states as such. And instead, what we see is a UK border going up between us and the EU. And we will have our own published tariff, which I will talk more on shortly. Because, of course, we all understand the complexities in Northern Ireland, we also see a separate protocol issued for Northern Ireland specifically as it relates to goods moving to or from Northern Ireland from the UK, and also to or from Northern Ireland from the EU. So I will cover a little about Northern Ireland Protocol later on in the deck as well. And so what this means is, without a trade negotiation, what we will see is taxes when goods are moved between the EU and the UK. We'll have each of those external tariffs imposed on the other goods from the other country. And we also see customs processes. And one of the points I really want to stress is those customs processes exist both sides. So movement of goods from EU to UK will require an EU customs process to export the goods and a UK process to import the goods. So just in case any of you haven't looked into it in that level of depth, it's not just one declaration for both sides. Okay, so then of course all of the news is around whether there's going to be a deal or no deal between the UK and the EU. If there is a trade deal, yes, we may see a reduction or elimination of customs duties. Typically, trade deals are negotiated at commodity level, so there's no guarantee that everything would come down to 0% duty, but we of course hope that it will. We may also see reductions in checks and harmonisation of certain standards. This can happen with or without a trade deal, but usually a lot of that is wrapped up within those negotiations. What it doesn't mean is all the other stuff goes away. So either way, there's going to be rules on those goods moving between the EU and the UK going forward, as there is now for the EU, as we see trade from the rest of the world to and from. And that means customs declarations, it means customs taxes. Even if there's a trade deal and there's no duty, there's still going to be VAT to account for. So basically, yeah, most of what follows is absolutely kind of set in stone whether there's a deal or not. And so we will carry on. Okay, there was something called transitional simplified procedures, which was introduced the last time we felt that we might leave the EU with a hard Brexit at the end of January this year. And it was a quick and easy registration, and a company was issued with a TSP authorization, as it were. And unfortunately, that was due to that last hard Brexit. And as you can see here from this image, that guidance has been withdrawn. It was withdrawn when we didn't leave. So if you have a TSP registration and you are working on the assumption that that's going to help you next year, unfortunately, it's no longer the case. There is an equivalent that's been introduced, and I will introduce that as we move through this deck. But if you've got TSP, it's basically worthless now. So just good to highlight before we get into the solutions. In terms of what you need to know about next year and what changes are coming and what needs to happen, whether you're a carrier, an importer, an exporter, an agent, there's two main reference documents. The first one is the UK Border Operating Model, and this is already on its second revision. So this is a working document and the government do expect to keep adding to this, but it is as detailed a guide as you can find, and it breaks down the flowcharts and what's required through a lot of different product categories, most of which are not going to be relevant to your particular sector, but it covers things like if it's fish, animal origin, excise goods, those sort of things. So it does go into a huge amount of detail, but of course it also covers everything from normal goods as well that aren't subject to any extra controls. Northern Irish Protocol is published in a separate document, so you will not find anything that relates to Northern Ireland in the UK Border Operating Model. So if any of you are moving goods to or from Northern Ireland, then you're needing to follow up on that guidance separately. And again, I think they're getting a bit closer to knowing exactly how it's going to work there, and I'll give you an overview of that as we go. Okay, so what do you need to do to import or export? The first thing you need is an EORI number. It's like having a passport for customs activities for the governments. And it means that even if a company name changes, directors change, all of that sort of thing, there's one unique identifier that goes on all customs declarations, authorizations, and the authorities can basically look at that number and see your entire kind of trading history. And they use it for a number of reasons, but predominantly to risk assess the nature of the business each EORI holder is doing. And the more you build up a compliant history, the less likely your goods are to be selected for examination and inspection. So what is needed when? An states would be needed only if the UK company was acting as exporter or importer in the EU. So the only two scenarios where that is even likely to happen is if a UK company was buying from the EU on ex-works terms and the seller was refusing to be named on the export entry. And in theory, ex-works is stating that the UK importer is responsible for arranging the export. Or if the UK company was selling into the EU under delivered duty paid terms, which again places the emphasis on import on the UK seller. In all other circumstances, we see that the UK company would need a UK EORI number and the EU company would need an EU EORI number. And so in most instances, the UK company should not need to be registering for an EU EORI as well. UK importers and exporters do, of course, need a GB EORI number. Until now, even if you had, for whatever reason, a different EU member state EORI, you would have been able to use that on import or export declarations in the UK. You won't be able to do that from next year. So anyone also a European side looking to be on a document and take care of import or export formalities in the UK, register for a GB EORI. And as highlighted previously with Northern Ireland, that's a slightly different setup. So what has been introduced is a different EORI number for Ireland, and that is going to start with XI as a prefix. In order to get a Northern Irish EORI number, you also need to hold already a GB EORI number. And only companies responsible for importing or exporting goods, or moving goods into or out of Northern Ireland would need to register for an XI EORI as well. But just worth highlighting there. Okay, the next most important thing is getting the commodity code right. So the commodity codes are used, you may have, if you've only been doing intra-EU movements, been somewhat involved in commodity codes for intrastat reporting, but when we move into international trade, there's a much greater impact if you get them wrong. So commodity codes are going to dictate the taxes payable on import, but also if there's any controls on the movement of those goods. So here what we have is a format. I've picked Christmas decorations. Sorry, it's a bit of a random one, but what you can see here is there's the tariff is divided into sections, and then what we see is the first 6 numbers comprise the chapter, heading and subheading, and those 3 relate to the harmonized system, which is a World Customs Organization structure of commodity codes. So globally, member countries of the WCO will use the same structure for commodity codes to the subheading level. So this is really important. It gives some certainty when trading internationally, assuming whoever classified the goods did it correctly. That, you know, if I'm looking at the Chinese tariff at this exact product, I should be in the same description as within the UK tariff or the American tariff. What it also means is that beyond those first 6 digits, there is no obligation for countries to harmonise beyond that. So at the moment, we have complete harmonisation of the system across the EU. What we do expect, to an extent, is the UK tariff will start drifting a little away from the EU tariff, because the last digits there are set to register taxes. So you will see sometimes maybe the UK will just consolidate because we want, you know, several breakdowns. EU side can just all have the same one rate of duty in the UK, or vice versa. So if you're assuming your UK tariff number is going to be the same as the EU one going forward, just a word of caution that there is absolutely no guarantee that would be the case. Best practice here is if you're producing UK paperwork for UK export, you show the UK tariff number. And if it's an import, the sender usually shows their tariff code, but work under the assumption that that's the tariff that's correct as per the country of origin tariff. You can take it as a suggestion, but don't trust that they've done it correctly. Ultimately, the UK company on the import or export declaration in the UK is the company responsible for getting that code right. And if it's wrong, and there's been a miscalculation of taxes as a result, or a circumnavigation of controls, then it would be HMRC knocking on the UK company's door and just saying that a supplier in, say, Sweden gave you that code is not going to be kind of good enough excuse. So classification really important and should go on the commercial invoice. Okay, so talking about tariffs, where do we find these codes and where do we find the rates of duty and VAT that apply to those goods on import? So at the moment we have the UK trade tariff, and this will still be our main resource going into next year. So the UK trade tariff is where we find all of the rules, basically. There's 3 volumes. Volume 1 has some kind of basic information. Volume 2 is the schedule, and Volume 3 is actually how to go about customs activities. And at the moment, our UK trade tariff is showing the EU common external duty rates because they are the ones that apply until we get into the 1st of January. So in order to let you know what the future duty rates are going to be in the country, they've also published a tool called the UK Global Tariff. And that is a tool where you can find in the normal tariff your correct commodity codes, plug it into this tool, and you will just see if the tariff rates are staying the same or changing. And just to take a closer look at that, here's a typical example from this tool. So here is what we would currently see in the UK tariff, which are the external rates applied for the EU. And then here they are publishing, this is what this means for these goods going into next year. And as you can see next to that, you've got a change. So liberalised means basically that the UK are taking the duty off that product and it can come in duty free. Simplified is usually we're seeing a rounding down of the duty rates, and no changes, of course, yeah, no change happening. So it's a really important tool if you're trying to understand what the no deal impact would be on future imports. You can, yeah, as I say, use this to understand it won't necessarily be the 2.7 going forward. You know, here we're seeing it would be maybe 2%. So although only a minor reduction, it could still make a difference. Right. I'm going to move on to talking about different port environments now, because one of the things that is stressed in the UK border operating model is there's a temporary storage model and a pre-lodgement model. And if you haven't come from a background where you've worked in ports, this might not make a huge amount of sense. So just to try and explain what the differences are between the two and why the government have introduced a new model, I'll just walk you through it very swiftly. So temporary storage is the traditional way a port or an airport would manage international trade. And by having that approval, the goods leave origin, then at some point en route or after arrival, the customs entry can be completed. Generally, the aim of the game is for agents to pre-lodge that entry, because that means as soon as those goods are arrived at that port or airport, they're processed instantly in the customs chief system, and hopefully they get a green light and their customs cleared. Customs clearance would also trigger tax payments, those sort of things. If it's a deferment account, it's very quick. So that's kind of usually how it works. But temporary storage also allows those goods to leave origin and arrive without them being entered. So they can sit in temporary storage for up to 90 days before a customs entry even needs to be made. And the temporary storage model is basically what the ports hold to allow them to hold undeclared cargo within their secure kind of area. It's obviously not allowed inland unless someone else has an inland approval of the same sort. As and when, within those 90 days, the information becomes available to make the entry, then the customs entry is completed. And again, then the goods can leave the port. So what this really comes down to is how much space that port has to store goods for up to 90 days. So as you can see here, this is just a tiny piece of the Port of Felixstowe, and you can see they've got a vast area where they can stack up containers. Some of them will be empty, some of them will be full, some cleared, some uncleared, some for import, some for export. So temporary storage is how that all happens. Now, if we think about the ro-ro ports, which have really developed largely since we joined the EU, they're set up in a completely different way. And the concern is that without a different approach, we'll have a ton of drivers arriving without the declarations. The port shouldn't technically let them leave. And then what happens to them? Where are they going to go? There's no space. So the pre-lodgement model works on the principle that the declaration is completed before the crossing is made. So it has to be done before the goods are actually leaving the origin country. They then proceed with a short sea ferry or Euro tunnel crossing. And then because the import declaration has already been provided to the carrier and linked to the vehicle or the trailer number, then immediately on arrival, or even ideally, I think they're talking about 30 minutes out, that driver knows if he's got customs clearance and then can just hit the road and go, or if he's got to report to probably more of an inland border point. They're building a massive one in Ashford to carry some of the weight from Dover, and also there's some other ones. So within a slide deck, I have included a couple of slides in an appendix with more details on that. So that's then allowing that driver to leave the port. And if we look at the structure of Dover, by contrast to Felixstowe, you can see there isn't really any space. There's these lanes where vehicles queue to board a ferry, but that's basically it. There's no extra space and nowhere to go. So that's why we're seeing two different models. And So basically, it's a commercial decision for the ports whether they want to use temporary storage or this new pre-lodgement model. The pre-lodgement model only is using a new system called Goods Vehicle Movement System. So how you bind the import entry to that particular driver is through an independent system called GVMS. It's basically, I don't know if it's the agent or the haulier in most instances. I mean, certainly we're offering to make that declaration on behalf of our clients. If the import entry is done, you then log into GVMS system, put in the import entry reference, the driver's vehicle or trailer number, and then that generates something called a goods movement reference, and that's what the driver would need to quote. Because this system does not yet exist, for the majority of movements next year, it's not going to be used until July, which is going to lead me into the kind of phasing of these controls. But it's just good to be aware of why that exists and what it relates to. The government have launched a couple of systems for drivers predominantly. So these are, you walk through them, and as you can see here, it's prompting you to answer questions to make sure a vehicle is actually ready and has all the references it needs to cross a border. At the moment, they've just launched this test version of an export checker tool, which also you'll see if the driver has to leave through Dover or the tunnel. They'll also need a Kent access pass, and by using this system, they can do the check and obtain that Kent access pass in one swoop. For anything more moving like containerized by those shipping routes, then none of this is relevant because they would go out, generally speaking, through a more traditional temporary storage model port. So we're expecting this predominantly just for the ro-ro traffic, but the government have written to all ports to ask which model or models they will be operating in which scenarios, and hope to publish a list soon. So we are eagerly awaiting that. As I say, we're seeing a bit of a phased approach to UK imports from the government. So there's a number of different things, but basically just the majority of systems that are going to be used are not yet built. So I think they're just kind of giving themselves a bit more time, and they're giving UK importers a bit more time to adapt to changes from the EU. What it doesn't mean is that the EU are doing the same. So even if we can defer an import declaration, we cannot defer the EU export declaration. And equally, for exports out of the UK, a full export entry is needed from day one. So, but what we see on imports is the introduction of something instead of TSP, which allows importers up to 6 months to make the import declaration. And it's only when that declaration is made that the taxes become due. So it's a cash flow and admin benefit, but ultimately the taxes will still be due if there is taxes to pay. And I'll kind of get to another slide shortly about that. We also see slightly different approach to low value goods. So anything below £135 in value would be treated slightly differently. So not relevant to most of your goods, I'm sure, but if you have the odd like specialist nuts and bolts or something coming in by courier, it could be relevant there. Okay, before we kind of move back, I just want to highlight the importance of understanding what's happening on the continent as well. So what we see on the short sea borders is different approaches by different EU member states. So Ireland are also operating what appears to be their own version of the GVMS system here. So they have something called a pre-lodgement model, which acts on the exact same principle for that ro-ro traffic. So they're calling it an envelope system, and they're asking that transport company to make sure their driver have an Irish reference to confirm that all the Irish customs declarations were taken care of and associated with that vehicle as well. With France, they also have something similar, but they're not making it mandatory for now. And that's through something called the Smart Freight System. And then a little longer route-wise, Netherlands and Belgium, we see working with more traditional temporary storage models. So no requirement to pre-lodge like a UK export to them. There's no need for the EU import entry to be pre-lodged before the UK export leaves the UK. But there is in the case of Ireland, and it's strongly recommended that that's done in the case of France as well. So just to walk you through what that might look like as an example. So we've got a driver here in Ireland, not Northern Ireland, and he's looking to move some goods between Dublin and Holyhead. So as he gets to Dublin, he's going to need to quote the Irish PBN, pre-boarding notification, which associates his vehicle with the Irish EU export entry. And then in order to board the ferry, he's also in at least July going to need to quote the UK GVMS goods movement reference number, the GMR reference we see, to be allowed to board, to confirm the formalities were taken care of on the UK side as well. And only then can the goods cross. So it's just really important to understand that these controls are happening both sides. Right, next. Customs entry, so what are we actually talking about? So the customs entry is completed on a document called a C88 because it's been around since 1988, or the SAD, a single administrative document. And what we find is it's broken down into different elements. So this top half here is the header level, and that's who's buying the goods, who's selling them, how they're moving, what's the value of it, that sort of thing. And then what we have is item level, and you need to complete this section. Each time you have a unique commodity code, a unique country of origin, or you're applying to put the goods into different customs procedures. So normal import procedure would be into home use, but there's a whole range of other procedures. Reliefs that can be claimed for samples or testing, customs warehousing and processing, all of those would demand a different customs procedure code. So if you've got, say, 4 different commodity codes, then you're just continuing that part of the declaration again and again. And then the last piece on an import, at least, would be then tax lines as well to inform the calculation of the import tax. So all of this, deal or no deal, is what's going to need to happen. And the only difference, if there is a trade deal, is there's one tiny little box at item level called preference. And we would change the coding in there. And when we get into the tax lines, we're just going to code the tax lines slightly differently to say these goods qualify for the trade deal. And we're also going to add in what evidence we hold to demonstrate those goods qualify. So other than that, everything needs to be completed. So hopefully that gives you very brief feel for what the declaration involves. Import taxes are traditionally paid through something called Deferment Accounts. So this is just like holding a credit card with HMRC, although you've got to get your bank to confirm traditionally that you're good for the money with something called a deferment guarantee. So normally a company would apply for a deferment account. They'd look at how much the maximum monthly tax they thought they would need to pay on it would be and apply for that monthly limit. And then they'd get bank guarantee that had to cover twice that, because there'd be the current month and the months that haven't yet been collected by the authorities. And banks, usually they're charging like a percentage, maybe like 2 to 3%. Yeah, it's like an overdraft facility in a way, but they lodge a guarantee with customs. So this has always been a bit of a long-winded process. The UK government have now opened up easier access to deferment accounts for both importers and agents. for all companies, they can apply for up to £10,000 a month. You need to be able to provide some financial information to prove that you're solvent. But the good news is, if you haven't got a deferment account already, you can now apply for one, and there should be basically no operating cost associated with that. If for whatever reason you don't meet the criteria, you can still get a normal account with a financial institution guarantee associated with it. You can also apply for above £10,000 a month. If you hold AEO, that's going to help. That's a customs authorization that proves to HMRC that you're compliant in your customs activities. But as you can see here, then you've got to provide some more financial information to demonstrate that your net assets exceed the waiver request. But really good to know, because this has only happened in the last couple of weeks. Equally, at the moment, we have to pay import duty and VAT at the time of arrival on a deferment account or by other means. Going forward, now from January, postponed VAT accounting is available as well. So what this means is that deferment account of £10,000, probably 80% of that would have been used on import VAT and 20% on duty. Now it can be used only for duty if you also decide to use postponed VAT accounting. So that just means that the import VAT is calculated on a customs entry, but again, we just code it a little differently to say that you'll be accessing postponed VAT accounting. You put in box 1 the VAT that was due on imports, then you reclaim it back in box 4, and add the total value of those imports in box 7. And we understand also that there will be some reports available on that. Drivers often are asked to provide an MRN number. This is basically what that looks like on a customs form, whether it's an export, accompanying document, or a transit document. So just to try and put that in a more visual context for you, because when you look at the guidance, there's lots of talk about MRN. That's basically what we mean. There's usually a barcode with a unique number below it. Okay, touched on Incoterms earlier. So they are how the buyer and seller agree who's doing what. And they specifically cover that, the obligations, the risk. So if those goods are damaged along the way, does it sit on the seller or the buyer's risk? And the costs, so who's paying for what? And you can get a chart of this free of charge from the International Chamber of Commerce. But basically, these have been used a little loosely across the EU because there hasn't been any taxes or customs formalities. So if you haven't already started reviewing your Incoterms between your suppliers or your customers, now is the time. Incoterms were updated in 2020, so it's a good enough time as any to have a look at what is agreed contractually. And ideally, wherever possible, you want to steer clear of ex-works or DDP, which can be a little harder to manage and comes with a little higher compliance risk. What the implications are of most of this is that for Ro-Ro freight, there's 2 different customs declarations and therefore 2 different associated movement reference numbers. So these are common to the EU. And that driver is going to need to have both of those to cross. So how is that communication going to happen? Is the agent going to coordinate it? Is the importer going to collect both and provide it to the driver? Is the exporter going to collect both? So a lot of these discussions we're finding haven't yet happened, and we're encouraging either, for the agent to coordinate on behalf of companies, or one or the other party take the lead. Otherwise, you're going to have a confused driver probably. Equally, making sure that that's available, that, you know, if a driver has a delivery note, that he has the contacts of both agents, so that if there is any issue, he can reach out and get any issues resolved. So yeah, it's getting close, and what we find again on calls is no one's really considered that operational side of it. Again, with containerized traffic, it's a bit easier because there's just a little more time involved generally for that communication to happen. So what's replacing TSP is entry in declarant records. And what this means is the driver arrives into the UK, and this is available for the first 6 months of next year only. All the driver needs is the EORI number of the importer. The goods are received by that importer, and someone, importer or agent, needs to make that declaration in records. So what that means is basically you're mocking up the customs entry. That's basically the detail that the CIDR record needs, but you're not sending it through. And you've got up to 6 months from the time of arrival to send that declaration through. By the time the declaration's sent through, whoever's pushing that declaration through needs to hold Customs Freight Simplified Procedures, or CFSP approval. So that's something, you know, we've made sure that we are, we have in place to offer on behalf of customers, basically. So for our client base, we will make that entry into their records on their behalf, and then we're usually agreeing a time frame in which the supplementary declaration is sent through. What it means is, if the driver crosses or the goods arrive and the EU supplier hasn't been able to provide the paperwork in time to make the import declaration, we've just got a bit of time to sort it out. But waiting 6 months is a little higher risk, so wherever possible, we're agreeing more like, okay, well, we'll make the supplementary declarations the following month to import, or the same week, depending on each importer's requirements. So it's variable. But basically you're needing specialized software to manage that. And then each period we're usually doing a final supplementary declaration to confirm this is what we've made in records, these are the declarations that are done, this is what's outstanding. So goods wave through on arrival into the UK, but then all of this stuff has to happen to allow that. And I don't think the emphasis in the guidance thus far has really highlighted that that's not necessarily a straightforward thing to do. And holding CFSP approval is also, it requires a formal application. It takes 120 days to get. We get audited by HMRC on how we're going to manage that process. So unlike TSP, where it was just a quick registration, this is a little more involved. Okay, I'm just going to scoot through the last bit quickly. So Northern Ireland, what's different there? Northern Ireland remain in the EU single market, which means goods between the EU and Northern Ireland can move as they do today. Nothing else needed. Goods from Northern Ireland to the UK in the majority of instances will not need a declaration, and the UK are basing that on the unfettered access of Northern Irish companies accessing the UK market as a whole. However, as goods leave the UK into Northern Ireland, they're basically then entering this EU single market. So we are needing a declaration there. So the government for at least 2 years are providing something called Trader Support Service, or TSS, which is going to make those declarations on behalf of companies for free. It's optional. It's still under development, so feel free to also find an agent to have as a backup plan. But basically, it's to take the cost away of that additional control. So that's that. And then lastly, we'll just have a look at transit. So transit's something that allows goods to move between different countries. We have internal and external transit in Europe only. Internal transit is EU to EU movements through a non-EU country. but that is part of a common transit convention. And we have external transit, which allows non-EU goods to move across the EU or through to an inland point of clearance in the EU. And then TIR transit is a wider scheme, so that would be more relevant for, say, a movement from Russia to the UK by land. So there is an expected increase in uptake in transit from next year. And it does give you some solutions if you're wondering how to get goods, say, between mainland EU across the UK land bridge and back into Ireland. There shouldn't need to be customs formalities in the normal form there. Instead, we'd move them under a T2 document, so they can just pass through the UK but retain their EU free circ status. Lastly, trade deals between the UK and the rest of the world. The UK have been trying to roll over as many EU trade deals as they can. Here's the list of those that have been completed, the EU being the biggest one missing, but if you are trading with any of these other countries, you can expect some continuity in terms of the import taxes you access. So yeah, I went through that as quickly as I could. Sorry, that was probably a bit of blasting, but in a nutshell, that's kind of what you probably need to know right now. So I hope that was useful.
Thank you, Holly. Wow, that's, well, I don't have to do this and I'm scared. But it's even more worrying to find that a lot of these systems are still under development and I don't know, government, new computer systems, what could possibly go wrong? I'm sure with about 6 weeks to go, it'll all be absolutely fine and up and running on the 1st of January. Malcolm, do you have anything you want to come back with that on before we open up the floor?
Well, I mean, obviously not as a customs professional, but thank Holly very much for that very clear presentation. But I mean, I think I rather share your concern as someone who's been involved in developing a single market that was so easy to operate. The culture change of itself is going to be quite difficult to manage, I think. Because I mean, for 40 years, that's been the key ingredient that we've managed to work on. I was just going to ask a supplementary question because certainly when I was in the European Parliament in 2009 to 14, we passed a number of measures to introduce new pan-EU clearance, computerized clearance systems. I mean, there's been a huge investment in new clearance and online clearance systems. And I just wondered how many of those are still going to be accessible and whether the benefits of those are no longer going to be available.
So what we saw in the UK was a reaction to that, where they started developing the new CDS system to replace Chief. And part of that was to bring it in line with those European-wide IT systems, CDS being a notoriously delayed project. It was due to come online every past Brexit deadline and is not yet operational. They are saying that that's what Northern Irish entries would be based on, but from what we understand, the UK would not now have access to the rest of the EU connection there. So a UK company would lose the ability to be able to make, say, a declaration in Spain from the UK. But as I also understand, most EU member states haven't yet also launched their systems. I think there's a lot in progress. We see in Ireland, Revenue have just introduced a new custom system there that's again falling in line with that CDS type setup. But I've not come across anyone yet actually sitting in one country doing entries in another through that new system.
Thanks.
Thanks, Holly. I haven't got any questions yet. I think everybody must be completely bamboozled into wondering what is going on, or they've all rushed off to try and do something about it before it's too late. Does anybody want to jump in with a question? We'll just keep this going another couple of minutes.
Yeah, hi, this is Tony Reeves from Hyundai, UK. Hi, Holly. First of all, very, very well done on the presentation. Very informative. Very, very good presentation. Just a quick question for you. Any machines or products that are imported into the EU from a third country, in this case, it would be South Korea, imported into the EU but not placed on the market, and then later subsequently exported back into the UK or GB, how would they be dealt with?
Okay, so if it was brought in from South Korea into the EU, not using any kind of customs special procedures, then it would be subject to EU duty, unless the duty is zero with the trade deal. I don't know exactly. If it was a positive rate of duty, you're going to pay that, and on arrival into the UK, you'd then also pay the UK import duty, because those goods would not qualify for a UK-EU trade deal as the assumption, because they haven't been made in the EU or the UK. However, there's a couple of solutions there for you. So if they were brought in without yet a decision being made as to what market they go into, they can be stored in customs warehousing, which is, traditionally called bonded storage. And then they sit there duty unpaid. If they then came onto the UK, it would just be a re-export from a bonded warehouse with no tax ever becoming due in the EU. So that's usually how we'd look to operate it. Or if you were looking to change the goods in any way, equally inward processing would allow for that. So there will be a massive uptake, I think, in those sort of procedures, because they are specifically designed to avoid those dual kind of border taxes.
Yeah, I was going to say, because obviously if we've paid the initial duty into the EU, in this case it would be Antwerp, if we then wanted to re-export back to GB at a later date, then it sounds like we would have to pay double duty then.
Yeah, it's very difficult to reclaim duty once it's paid. There are a couple of instances, but it's usually if the goods are, defective in some way, or you can, if they are being re-exported, you can apply. But I don't think customs would look favourably if it kept happening. It's really a process for the obscure occasions where you have got no other option. But otherwise, yeah, customs warehousing, you don't need to necessarily have yourself. Like a company can offer customs warehousing as a public service as well. So you find a lot of forwarders will have also warehouses with those approvals, which might help.
Okay, wouldn't be able to use the transit status, no?
You could, it's all about whether they enter through circulation or not. So again, if they came into temporary storage only or customs warehousing only, then you would use transit to move it out of the EU into the UK. And then when that transit movement ends, because there's still rest of the world goods, you'd still need a customs import declaration at the end of it as well to discharge the transit.
Okay, probably something to look into in a bit more detail, yeah.
Yeah.
Well, Holly's available. I imagine her company is going to be very busy after today's webinar, but she is available for our new business. Another question, are there any changes for services? I was talking this morning about the lack of any information on services. We've got lots of information about what happens with goods after the end of the transition period. Holly, do you know anything about services, or are you more on the actual physical goods side?
Yeah.
I can do a bit on that.
Oh, great, yeah, because my knowledge is movement of goods only.
Okay, Malcolm?
Thanks.
Well, the issue is that, as far as we know at the moment, even if there's an agreement, that the UK has not proposed to adopt the provisions of the single market and services provisions that have been brought in by me actually and others back in 2004, and that includes, by the way, mutual recognition of qualifications for people who wish to go and provide professional services in other areas. Now, I mean, there may well be some sort of side arrangements, we haven't seen that yet, where there can be some continuity, but otherwise service providers will have to comply with any local regulations that may be provided. Now, that may sound not so important for manufacturers, but I just remind people that actually if there are any processes that have to be completed on a product, for example, if you need to send an engineer who's qualified in an area, for example, like an energy system or pressure vessels, where you need to have a certified operator, then that could be problematic in future. Because whereas that's been recognised, if they can provide that service in the UK, they can also provide it in other countries. It may well be that some sort of local regulations would require you to pre-notify who you were going to send. The answer is we don't know how that's going to operate as yet, I'm afraid to say.
Thanks, Malcolm. The next one, what makes trader support services, brackets TSS, optional?
Okay, right, yeah. So this is the government basically offering to step in and make declarations on behalf of anyone that needs them in Northern Ireland specifically. But they're not saying you have to use that. It is a free service. So I think the assumption is that most people will register and use that. But also, you know, if there's concerns over how that service is running or how effective it is, there's nothing to stop you appointing a customs agent to also make that declaration on your behalf. The point is the declaration is needed. You either use TSS or you do it another way.
Okay. Next one, any thoughts on what impact the additional customs formalities and procedures will add in terms of cost for imported goods in the UK, either as a cost per consignment or a percentage of the value?
Okay, so I mean, the cost of an import entry is usually in the range of about £60, £65 perhaps. So, you know, it's an extra cost, but compared to the cost of the goods, it's usually quite small. Other than that, are there going to be extra delays and logistics charges for driver waiting time or anything like that we haven't yet seen? Or so some of it is unfortunately a bit of an unknown, but the actual appointing an agent to make the customs declaration, it is a legal declaration. It's quite a complex thing to do, but that's usually a one-off fee, well, per entry. And yeah, beyond that, we'll all have to see, I think.
Okay, there was just a quick clarification somebody said about the EORI numbers. They've got an an EORI number, which I take to be a GB one. Can you just remind them that they do need the other ones for trading with other countries, with Northern Ireland and the EU one? Okay,
so you only need Northern Ireland Irish one if you're moving goods into Northern Ireland or from Northern Ireland, and you are also acting as the business in Northern Ireland on that declaration. So maybe that's like you've got a warehouse in the UK and a warehouse in Northern Ireland, and you're moving stock between the two. You will require a GB and an NI, EORI number. If you're actually moving those goods to a client in Northern Ireland, it would be on them to usually get the Northern Irish EORI number, and also your supplier moving them back again. And that same principle applies to EU as well. Okay, sounds like you're having a raid. The office is near a fire station. Another one on services. I don't know whether Malcolm can do that. In the case of providing consultancy services in England for EU customers, what may be required to invoice them?
Well, I think it's not very clear. I mean, I think consultancy services are not something that are that tightly regulated in terms of, having to have professional qualifications and so on. So I'm not sure that those will be a particular issue. But I mean, we're going to have to wait to see what the final terms are, because there has been up to now a provision that you couldn't be restricted from providing a service locally, and that we hope there'll be some sort of mutual recognition arrangement on that. While I'm speaking, I wonder if I could actually pose a question to Holly as well, because it seems to me an important one for many of you who are involved in producing quite complex products with quite a high level of maybe systems or components supplied from other EU countries or outside the EU. Because the issue about local content and marks of origin is, I think, going to loom quite large. I mean, certainly for the car industry, we've been arguing about this, about what is an EU originated product which may qualify for zero tariff entry. And I think particularly there are issues very contemporaneous today about electrification generally, because there are an increasing tendency for high value components like batteries and electric motors to be imported and then incorporated into products. And that's something which Holly may be more familiar with, but that seems to me that that's going to be a more problematic issue for the future. And we're going to have to keep very close watch on those sort of local content issues that you may not have had to do before.
Yeah, absolutely. So the rules of origin, where you say something is made, and give it an economic nationality, are laid out usually within a trade agreement, and they are usually done at chapter level, so per product kind of category, and then you will also find exemptions within each of those chapters. So sometimes when we're training, what we use is a sort of 60-40 as an example. So usually maybe no more than 40% of the X works value of the goods can be comprised of foreign materials, as it were. But also what you find is sometimes the rules are not that at all, and they just say manufacture from any materials as long as the final product jumps into a different part of the tariff. So what's really critical is that, the analysis is done at that granular level. You identify which chapters in the tariff that you are kind of producing goods to have result in those commodity codes, and then you start having a look. And the best place to start is HMRC Notice 828, because it doesn't cover all trade deals, but it covers quite a number of trade deals. So it seems to be a common starting point, at least for any others as well. And so that would give you a bit of a feel, and it has that guidance broken down. There's a couple of important points when reading that. When it references the word materials, that means non-originating materials, so don't forget to read it in that light. And all trade deals have bilateral accumulation built in. So in the future, if you're looking to build something here and access a future UK-EU trade deal, if we get one at some point, you would be allowed to class any EU components as originating, as well as UK components, which should help perhaps you meet those rules. So, yeah.
Okay, I'm going to have to call time on the questions now, because I know Holly's got another Zoom to go on, but that's just been, I think, incredibly helpful. And Holly will get back to those of you who've put the questions in the chat box, hopefully in the next day or so. So huge thanks to Holly and also to Malcolm. I think it's just really highlighted how much work everybody has to do, and to a certain extent we're all flying blind because we don't know when this free trade agreement is going to happen, and if it's going to happen, and what form it's going to happen in. Hopefully you all receive the Construction Equipment Association's Brexit bulletins if you're members. If you don't get them and you would like to receive them, please let me know. The next Power Hour, and there's going to be quite a challenge to follow that, but I think we've got a really good one for December, is a joint presentation between Leica and Husco International on semi-autonomous machine control solutions. It's an entirely different subject than what we've learned about today. January will be a similar format to today, but on the more technical regulatory impacts of the end of the transition period. So thank you so much for everybody for coming today. And we've gone over by about 15, 20 minutes, but I think it was definitely worth waiting for. and thank you for your continued support of the Construction Equipment Association. So have a good day, enjoy the now pouring rain if you're up north, and sunshine if you're in Kent. Goodbye.